Hello traders, Gary Wagner here. It is 12:06 in Honolulu, 5:06 in New York on Thursday, 8th day of September 2022, and this is the daily report for gold and silver. Gold futures, basis the most active February contract, is currently trading higher to the tune of $3.30 or 0.18%, and fixed at $1,801.30. However, the small gain today is a little bit deceiving in that it is actually driven by dollar weakness and fractional selling pressure by market participants in the future market. The dollar index is currently down 0.25%, a greater percentage than the gains in gold, so that the differential, or 0.07%, is a result of fractional selling pressure in gold today. Lastly, silver is having a respectable gain of 1.54%, with the most active March contract up 35 cents an ounce and fixed at $23.27.5. This first chart is a weekly chart of gold futures, and even with 1 day left, I still think that it could be a valid candlestick. It is showing a decline on the week, but a higher high and a higher low than the previous week. That being said, when we break up this weekly candlestick into daily candles, it will give us true insight as to what occurred in trading this week. I've just put up a daily candlestick chart of gold futures, and it's easy to see that this week is greatly defined by Monday's dramatic sell-off, in which we had the highest high this year after the market fell from its high of $2,077 in March down to these lows between 1618 and 1621. We traded to a high of $1,823. On Tuesday, we absolutely saw the market consolidating. To me, the most important feature of Tuesday's action is not that it had gains on the day when compared to its open or Monday's close, but rather it is the low, because on Tuesday, we saw a higher low than what occurred on Monday, which brings us to yesterday's strong gains up in double digits, but roughly half of what we saw in terms of the decline on Monday. And what was significant is that Monday's action resulted in gold prices moving below the 200-day moving average. And even with yesterday's strong price ascent, gold futures did not breach and close above its 200-day moving average that was broken on Monday's sharp decline. Today, we saw gold futures close just above the 200-day moving average, with the 200-day moving average currently fixed at $1,800.10, just below gold's current price. I would not be surprised if on Monday of next week and tomorrow result in quiet trading days, continued consolidation, because traders are waiting to hear from the Federal Reserve on Wednesday and see what the CPI inflation report reveals on Tuesday. That being said, in terms of my short-term view of the market, I'm not convinced, based on technical indicators, that this correction has run its course. I believe we could see further price declines taking us as low as 1745, the 38.2% fib retracement. But at the same time, we have to acknowledge that this market has been headline driven and not technically fueled. My long-term outlook is still extremely bullish. My question is positioning ourselves for the next trade, and whether or not what we've witnessed in terms of the sell-off on Monday and subsequent recovery Tuesday, Wednesday, and today indicates that we really had an extremely shallow price correction. Which brings us to silver. We are looking at a daily candlestick chart of the March futures contract. It is clearly defined in a different way than what we have seen in gold. First of all, Silver is trading well above its 200-day moving average. We see a sharper move to the upside in the 50-day moving average, meaning it is getting closer to the 200-day than when you compare the 200-day and 50-day moving averages in gold. The recovery for silver has been much more steep when you consider that today's pricing is almost a full recovery from Monday's decline. We still believe that our target is roughly $24.25 for this leg of the rally. It is based upon a 1.618 extension from the last leg of the rally, which took silver from $17.40 to $21.28. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.